The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 11th day of February, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. When you join that way, you also have access to the chat box. This means you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, point any internet-connected browser to cfrn.net/live And there you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. We also stream live during this broadcast at youtube.com/CFRN. And on that channel, we have archived over 1,600 daily broadcasts. If you happen to be listening to this broadcast as a podcast, iTunes, iHeartRadio, Spotify, wherever pods are cast, if you want to participate in the video as well as the audio, hit pause on your podcast player and then just point your browser over to youtube.com/CFRN. And there you'll have access to both the audio and video of today's broadcast. If you're driving, operating heavy machinery, better stick with the podcast and keep your eyes on the road or that heavy load. Okay. So, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. We thank you for your goodness and generosity. We trust you for faithfully preserving us through the good times and the bad. We serve you with all that we have. We glorify you in our plans and activities. We speak of you to others in response to your great love for us. We live for you in every thought, word, and deed by the power of your Spirit. You are the God of endurance and encouragement. Help us to live in harmony with each other, that together we may, with one voice, glorify you. In Jesus' name we pray. Amen. Okay, happy Thursday. Let's see what the numbers hold. These are the numbers from around the world, the cash markets, the indices as they're called. Today's Thursday. Dr. Tom should be joining us at the top of the hour. He was out last Thursday with a sore throat. It's kind of hard to do radio and podcast and all that jazz with a sore throat. So let me get some fresh data and give you those numbers. Starting here in the U.S., an interesting session. We're at all-time historic highs, and it's sort of a push-me-pull-you kind of market. The indices, the S&P, the Dow, the Russell, the NQ, they're sort of pack animals. They tend to travel together in the same direction. Not in lockstep. One gets out ahead of the other, and one lags behind, but basically they tend to have the same direction in mind. Today was a great example of that not being the case. We had the S&P and the Dow trying to move lower, while the Russell and the NQ were trying to move higher. Gold was dropping but into support. Crude was trying to rally but into resistance. And so traders were forced to do one of the most difficult things in trading. We know that trading is not easy. Not trading is really hard, as one of our members commented this morning in the discussion group. So currently the Dow down 42 points, NASDAQ up 47, S&P 500 up 2.25, and the Russell 2000 up 9.5. In the commodity basket, crude oil down 27 cents, trading 58.41 last. Gold down $11.90, trading 18.30.80 last. Silver down 2 cents, trading 27.10 last. In the Asian markets at the close, Nikkei posted a gain of 57 points. Shanghai rose 51. The Hang Seng gained 134. Now for the Shanghai, that is a gain of 1.5%. In the European markets at the close, FTSE up 4, DAX up 107, the CAC down 1. No real movers or shakers across the board. with the exception of the Shanghai. We did have a green day in Asia, a mixed day in the UK, and it is a mixed day here in the US of A, with the Dow the only one in the red, only by 47 points. The S&P positive only by 1 3/4 points. So with that, let's go to Michael and get a recap of what happened this morning in the live training room. After that, I'll come back. We'll look at the Concierge Trade Alerts, the Logic 247 alerts, and at the top of the hour, we'll talk with Dr. Tom.
Dr. Tom. Okay.
Dr. Tom.
Hang on, let me make sure I got the right ones going here. I believe I do. I don't. I know I had it up just a minute ago. Here we go. I'll go with this one. Give me just 1 second. Here it comes. All right. I'm going to switch everything over here.
Okay, there we go.
And there it is. All right.
Lots
So I'll take it off.
All yours.
Excellent. All right. So here we go, guys. Good afternoon, everyone. Hang on. Let me scroll up. There we go. All right. Good afternoon, everyone. Today is Thursday, the 11th day of February 2021. Keep in mind, today is Thursday. That means we have a partners meeting tonight at 9 p.m. Eastern time. If you are an active partner, you will be sent an email telling you how to get into it tonight. You'll be sent the email this afternoon, but the meeting is tonight. If you are on the trial, or if you are an inactive partner and you want to get into the meeting and see what we're talking about tonight, well, you simply have to become a partner before the meeting. If you don't know what it takes to become a partner, all you have to do is send an email to support@cfrn.net and just put partner info in the header, or active membership in the header, and we'll get back to you with all the information that you need to get into that meeting tonight. Okay, so as I said, today is the 11th day of February 2021. If you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, we only made 1 tick in crude oil and made 39 ticks in gold and 5 on the ES. That put us at plus 462.5 on the morning session. Today took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 22 trades. So on the month now, we're up $6,820. That's over 9 trading days, averaging $757 per contract per 2-hour trading day. We're now on our 3rd consecutive day of the year of getting the goal, but we're actually on our 27th day of getting the goal out of 28 days so far this year. And on the year now, we're at $21,155 contract. That's over 28 trading days, averaging $755 per contract per 2-hour trading day. Okay, now I want to bring you here to the homepage at CFRN.net, which is where you will go if you want to take a free trial with us. Go to the homepage at CFRN.net. And right here, scroll down to where it says free 5-day trial and click on that. That's going to bring you to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the link, we don't know that you took the free trial, so you got to click on that link, all right? All right, so let's get into the trades. Once again, gold is the one we traded the most often, so I'll start out with the ES today. Okay. You see the ES just tanked all the way down to that weekly trading zone again. All right. Let's get started here. I thought there was more to the ES than I'd written down. Here you go. Our first trade on the ES was right here. We stopped out, -8 ticks. We missed this follow-up trade right here. That would have been a break even. We did get a break even after that. We missed that one where we would have taken some profit. We did take a little profit on this, 1 tick to put us at -7. Then we picked up 9 ticks on this. No, we picked up 8 ticks on that to put us at +1. and then 4 ticks on this to put us at +5 on the morning session. We had a break-even trade right there, and then we get into the break. Now, during the break, we really didn't have any notice that it was going to take this big move down right here. Now, down here in the DMT, we had a pierce of the envelope from the bottom right here, suggesting it was going to go down. We had one there as well, suggesting it was going to go down, but we didn't get the trade set up to correspond with it. Okay, since it's gone down, there was a trade set up right here on the short side, followed up by another one right there. You could have still been in that one while this one occurred. Either way, it's suggesting it's going to go down. And where is it going to go, you might ask? Well, let me go back over here. Open that up. Open this up. Open that up. Copy that. I'm sorry. This is what it takes. Go here. There, and there, and there. And I will be able to give you a number here. Right now, what I'm thinking on the downside, it's looking like it wants to put in a new low on the day and get down to 38.94 and a half. 38.94 and a half. It really doesn't have anything strong on the upside. There's a little more weight on the upside, but there's nothing really strong on the upside. So I like the downside right here. If the indicator suggests it should short, then you should go with charts. Okay. But that was it on the ES. Crude oil, we had this one trade right here. Actually, we had one trade. We picked up 1 tick here on crude. The last couple of days, crude hasn't been giving up a lot of opportunity. During the break, they did give 1 short right here. Looks like a nice trade right there, but that was it during the break. Okay, now we had the pierce of the envelope from right here, and this was the next trading opportunity, and it did give enough to get the goal for the day. All right, but you can see I was drawing all kinds of triangle stuff and levels in here that it needed to break to start moving, and crude was just, it's been a dog lately. Now gold's been very friendly to us lately, and so we'll go to gold and give it a little extra attention today. Now, gold started out right here. I would have gotten the gold for the day if I had taken that bounce off the BBC right there. I missed that, and I missed this one. But I picked up the third one. I did get the gold for the day on the third one right there. But it was my first trade, so I picked it up after, I don't know, what did I say, 6 minutes and 1 trade. We got another 10 ticks on the second trade. Then let's see, then we had a break even. We missed a trade, missed a trade, missed a trade. Another break even. Then we stopped out pretty much to the tick before it made that big move down. So at that point, we're at plus 12 after the stop out. Then we had a break even there. We picked up 12 ticks there to put us at plus 24. Then we picked up another 3 ticks to put us at plus 37. I'm sorry, 32. Then we picked up 5 ticks to put us at plus, we picked up 3 ticks to put us at plus 27, 5 ticks to put us at plus 32, 2 ticks to put us at plus 34, and 5 ticks to put us at plus 39. We missed that one right in there. Yeah, it looks like we were waiting for this to give us a lower swing. That's why we didn't jump on this right here. But I was saying that I expected it to get down there, but it just didn't give us a trade setup. Okay. During the break, there was a lot of movement on the gold, as you can see. And I was looking for a lot of movement during the break when European markets closed, and it did not disappoint. Not a lot of trade setups in there, though. You know, as much movement as there was, there just were not a lot of trade setups. So that was it on the morning session. So now I'll go back here. I'm going back to the S, would have been a YBR trade. Dwayne, from way back here. I don't like the way the cycle is going up really steep like that. I do like the separation here. It would have been a YBR trade from back here. Dwayne, from back here, I would have liked it better than right here. Okay. So, you know, that's on the 4 tick range, but if you look at it on a larger time frame, you see it's going to give a little bit better of a YBR trade right there. And I know it flipped the other way as far as the blue went right there, but the slingshot wasn't saying you're going to go long. It's still saying, on the short side. But I mean, if you go to like, the 30-minute, which is something that Dwayne and I said we're going to start doing, and mixing up, levels and stuff like that from the 30-minute to the smaller time frame. Breaking through this 3907 level right here was pretty huge, going down to the zone. So if you look at it here on the 4-tick range, right in here, breaking through 3907 in here was a big deal. Okay. All right. Hang on. I was going through this. No, that doesn't have the spreadsheet open. This does have the spreadsheet open. Okay, so if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 11th day of February 2021. We made 1 tick in crude, 39 ticks in gold, and 5 on the ES. Put us at plus 462.5 on the morning session. That's $462.50 this morning with 1 contract in 2 hours. Today, it took 6 minutes and 1 trade to get to the goal. At that point, we're up $100 a contract, and we took a total of 22 trades this morning. So on the month now, we're up $6,820. That's over 9 trading days, averaging $757 per contract per 2-hour trading day. So far this year, 27 out of 28 days, we've made our goal. So far, we're on our 3rd consecutive day of doing that. On the year now, in the total, we're at $21,155. That's over 28 trading days, averaging $755 per contract per 2-hour trading day. If you have not taken a free trial with us, go to the home page here at CFRN.net. And right here it says free 5-day trial, no credit card required. Click on that and you'll be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest training channel so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't do that, we don't know you took the free trial. Okay, so you have to do that. All right, and that's it. With that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, South Mountain. Oh, look at Mary's Larger City Park. Dwayne, if you're ready. I just messed up that whole conversion thing.
You did.
Pass it back
just
up.
fine.
Pass it back up.
Just fine. Okay, recap.
Fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. There, I got it. To recap with a recap. Today's 6 minutes and 1 trade to get to $100 a contract.
Good job.
6 minutes trade. Thank you.
Okie doke. Well, it's been an interesting day. Yesterday we had an outside day. Today, so far, we're having an inside day. Let me just show you what that looks like and what that means. Okay, this is a daily chart of the S&P 500 Emini Futures. So today, the Thursday candle, and we just hit, let me refresh this. There we go. Always, on your daily chart, you're always going to need to refresh it, because things get out of whack a little bit. Okay, so see, now that I refreshed it, we're headed down to support. Now, we may have changed the fact that this was an inside day. Okay, today's the Thursday candle, which started last night at 6 p.m. Eastern. Wednesday, Tuesday. So Tuesday, we closed with a very small daily candle, a doji. Yesterday we had an outside day, and outside means that the high of this candle is higher than the previous day's candle, and the low of this candle, which was 38.78 and a quarter, was lower than the low of the previous day's candle at 38.95. So yesterday we had a higher high and a lower low of the previous day's candle. Now, so far today, when I first mentioned this earlier, we were having an inside day, which means the high is lower than the high of yesterday. The high is lower than that high, and the low was higher than this low, but that just changed, I believe. Today's low is now, come on, show me. Come on. Gotta be able to up a little bit. Try that. Okay, pop up the low. There we go. So today's low is now 38.90. Yesterday's low was 38.78 and a quarter. So we still have an inside day. If I take the indicators off for just a minute, maybe you'll be able to see it more clearly. I may not be able to put them back on. Okay, without going through. So let me just, the low of yesterday, 38.78 and a quarter, which is, it's hidden right here behind the step line. Okay, 38.78 and a quarter. Today's low, 38.90. So we still have a little ways to go. Now, this is indicative of a market finding a top. We can see it across here. That this led into this decline, which was the first time we closed below the BBC on the daily chart since way back on November 4th. Now, we spent 1, 2, 3, 4 sessions below the daily BBC. And then on this session, we got back above it, and that began the climb to the new all-time historic intraday high. Now, the closing high of this day, this was a new all-time historic intraday and closing high. We closed at 39.10.50. Following day, we closed at 39.10.75. So one tick higher, okay? A one tick higher close. Got to be suspicious of that. But then we come in the following day, Wednesday, which began Tuesday night. We put in a higher intraday high, and our closing high yesterday was 39.08 and a quarter versus 39.10.75. So while we had a higher intraday high yesterday, we did not have a higher closing high. So that's an initial sign of weakness, okay? And today's red candle, that shows weakness. Question is, will the low at 38.78 and a quarter, is that going to hold as support? Let's see if we can put this little line at 38.78 and a quarter. Wow, we did it. 38.70 and a quarter. Now, so the low of this candle the previous day is right at blue and climbing. When price drops to blue and climbing, we expect that to be good support until proven otherwise. If price can get through blue and climbing, then the next major support here on the daily chart will be the green line, which is the BBC. Now, we only use a few indicators. The BBC, that just stands for bull bear cross. Okay, it's a real easy concept to understand. When price gets above that green line, we're bullish, we anticipate higher prices. When we close below it, that's bearish, we anticipate lower prices. Lower prices, higher prices, lower prices, higher prices. The other indicator that you see, it's called the CFMA1. I refer to it as red and falling, blue and climbing. Red and falling is also bearish. It also represents potential resistance as price tries to get through it. And as you can see here, red and falling led us all the way down. And then when the market found its low, on October the 30th, it took 1, 2 sessions, 3 sessions to close back above the BBC, and red and falling turned into blue and climbing. So from bearish to bullish for 2 reasons. Number 1, most important, we're above the BBC again, and we have the support of blue and climbing. Now, after that happened, we had a number of retracements to the BBC. Price always reverts to the mean, and in our case, the mean just happens to be green. So we pull back. We expect that to be good support until proven otherwise. So that pullback led to a rally, which led to this retracement. And on this day, we spiked below the BBC, but by the time the market closed on this session, buyers had driven it back up above. Another pullback, it holds, and it holds, and it holds, and it holds, and it holds. Eventually, it has to not hold, otherwise we'd end up with a stagnant sideways market. So on this day, January 27th, that was the first close below the BBC since this day right here, November 3rd. November 4th got us back above it. So this is kind of a big deal. Now, when this was the all-time historic high, this retracement right here took us to the 24% Fibonacci retracement. That's the shallowest possible fib retracement. We hit the 24% fib and bounced 30 points. The session closed. Session reopened an hour later, 6 p.m. Eastern. We went down and tagged the 24% fib again, which set us back to the BBC. We came down and we spiked the 24, and now this area is the 38 based on the new all-time historic high. Yesterday on the show we had to raise this because we had a new intraday high. All right, so we start with our daily chart so that we can determine where major resistance and major support exist, because on the smaller time frame it may not always be obvious. So we know that the all-time high, that's of course very important. You might write that down. Even though it's an intraday high, not a closing high, 39.2850 intraday high. Today's high, 39.2050. So if buyers take control and begin to move price up, first place we look for resistance, of course, would be today's high, and then yesterday the all-time historic high. So those are 2 numbers that you should jot down on your notepad. Then there's support. Well, support right now, 38.80 is where the blue and climbing is. So we expect that to be good support until proven otherwise. Now, if you look at this swing high here and come across, yesterday, blue and climbing lined right up with this area. But because we put in a higher high with a new candle, blue and climbing has now moved up to 38.80 and change. So you should write that down. That's important as major support. And then the BBC 38.31, you should write that down. In fact, I'll make a note of those myself, because when we go to the smaller time frame, we want to note those on our smaller time frame chart. So 39.28 and a half, and then today's high, 39.20 and a half. So major resistance overhead, those 2 numbers. Major support, 38.80. Followed by, as you can see the numbers here, 38.31. If these numbers don't show up here, that's because in here you have runners turned off. That's what they're called. Okay. I think I'm trying to remember with DT Pro if it's by default that the runners are on or off. I think they're on. So just at a glance, you can see that the daily BBC is at 38.31. So right now, based on a daily chart, what's the next high probability move? Well, because we've kind of gotten below that step line by just a little bit, down to blue and climbing from a daily perspective, certainly looks like the next high probability move. Below that, this swing high, potential support, and then a drop down to the daily BBC. Now, a drop to the daily BBC, that will typically be good support and good for a bounce, a nice bounce. It can be also where the market turns for another leg up, like it did here, like it did here, like it did here. Now, when we go to the 30-minute chart, you're going to see the same indicators. We read them the same, we understand them the same, we treat them the same. When we go from a larger time frame to a smaller time frame, nothing changes. When we go from the S&P to the Dow to the Russell to the NQ to silver to crude, whatever, everything remains the same. Okay, so with those numbers in mind, let's go look at the 30-minute chart. All alerts, logic, and concierge are based on the 30-minute chart. The alerts are part of your learning curriculum. Michael teaches you each day in the room the underlying methodology and strategy, how to read the indicators, what the trade setup is. He teaches you our highest probability trade setup over and over and over. We use a fast time frame because we want to be able to show you as many trade setups as possible during the 2 hours that we have each day. The alerts, which come out around the clock, Logic 247, there's two types of alerts. One's a static report, the others come out around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. What this allows you to do is to take what you learn in the room in the morning, and when the alert sounds on your phone, your tablet, your PC, or your Mac, we use the Telegram instant messaging client to provide the alerts. When the alert sounds, that's not an alert to put on a trade. It's an alert to go to the chart, look at the alert, look at your chart, understand why that is considered a window of opportunity, why the entry is where it is, where the first target, second target, the final target, and then as it triggers in your demo account, in your simulator, you trade the alert. Now, when you become a member, you should, I don't care how much trading experience you have, you should not start trading live. You should trade in the simulator, in the demo account, until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. So our training is not limited to just 2 hours in the morning. The training continues around the clock. Also in Telegram, which we use for a number of different things, we have a discussion group. When there's an alert, people share their charts, people share their trades, people discuss the alerts. We want everyone to understand what's happening, why it's happening, what to expect from it. And the more times that you hear the alarm, go to the chart, trade the alert, the better you get at understanding our strategy, our methodology, how to read the chart, how to read the indicators. Now, our goal here is not to just give you alerts that you can trade to make money. Our goal is to teach you how to find these windows of opportunity, as we call them, on your own. The weekly trading zones play a big role in that. We just passed through a zone at 3900/3901. Above that, we have a weekly zone at 3930/31. The next zone below, now that's an old weekly zone, still on the chart because we have zones from time to time that hold sway over the market for 2 weeks, 3 weeks. The zones come out every Monday morning at 6:15 a.m. Eastern. You should get those on your chart right away before Wall Street wakes up for the week. The old zones from the previous week, those still hold sway over the market. Sunday night, Monday, Tuesday. As the week progresses, you'll see the new zones take control, but there will be these zones like this 3855 that continue to play an important role. And here's a great example of that. This old zone at 3885 on the 5th, which was last Friday, okay? That area, and this zone is from like 2 weeks ago. It was resistance, it was resistance, it was resistance, and then here's the Sunday night open, February 7th at 6 p.m. Eastern. We got higher on the open. We continued up to the zone at 3900/3901, and then price came right back down. Resistance, resistance, resistance has now become support. And again, okay, overhead, you'll see this consolidation. Only 3 things happen at a weekly trading zone. The most likely thing to happen is consolidation. There, there, there. You'll see it over and over, again and again. 70 to 75% of the time, it's going to be consolidation. After the consolidation, the market will make up its mind if it's going to head to the zone below or if it's going to try to travel to the zone overhead. The second most likely thing to happen is rejection. And I don't have a good example of rejection here. Well, we had just come out of consolidation, but you see how price came down, touched the zone, but when the 30-minute candle was over, all that was left touching the zone was the wick. So that's rejection. The third and least likely thing is the slice. That's when price slices through a zone like it's not even there. And when I see a good example of that, I'll show it to you. Yeah, here. Now, this isn't ideal, but it's close enough to give you the point. We consolidated, and then we sliced. When price slices through a zone like it's not even there, it will typically, as it runs out of steam, it will return to the zone that it sliced through and then continue in the direction of the slice. Usually it will happen in a couple, 3 30-minute candles. This took a lot longer than normal. But those are the 3 things in these markets where anything and everything does happen. Finding something constant that you can anchor yourself to is important. Because in a market that's always changing, there has to be some constant in the equation, and you and your understanding of how price operates around these zones can become that constant part of the equation. And so we had the run up yesterday. This was a logical alert to be long 39.15. On the first 30-minute candle, it triggered, it ran through the initial target up to 39.18. And then the same 30-minute candle, it retraced and got back below the trigger. Triggers a second time, makes it up to the second target. Second target, as you can see here, was 39.23. Swing high was 39.24. Price pulls back to the BBC, which we expect to be good support until proven otherwise. And I talked about red and falling, how that's resistance. As you can see, price found support at the BBC, resistance at red and falling, back to support, back to resistance, back to support, back to resistance. And then right here, as price gets pinched up between red and falling and the BBC, it makes that final run for the zone. The zone's 30/31. The swing high, 39.28.5. The zones are an area. We get accustomed to price turning right at a zone on many occasions, but you have to remember it's an area. So if you were holding out for the final target at 39.30/31, okay, it never made it there. Got close because zones are an area, just like fibs. So as you're approaching that zone, you need to be tightening up that stop, okay, using whatever methodology, trailing by whatever distance you determine. In our 24/20 blueprint, you write a business plan, you write a trading plan, while you're putting together your 10 consecutive days in a row. You won't even consider going live until you've put together those 10 consecutive days in a row, so you have all that time using the blueprint as a guide to write your business plan, to write your trading plan. Okay. So right now we're sitting on top of an old trend line that started back here on the 8th, which was Monday, Sunday night, Monday session. Okay. There's a swing high, swing high, swing high. And then we broke above that trend line and we dropped back below it to get back above it. So this trend line has really lost its value at this point. But you see what price did right here. Now today we had a situation where the Dow and the S&P were attempting lower while the Russell and the NQ were attempting higher. Whenever you see that, it's usually a good idea to refrain from trading until all four are headed in the same direction. Not in lockstep, but they're pack animals. They're the index futures. Your highest probability, lowest risk trade opportunities are going to come when either all four are in the green or all four are in the red. When the ranks are divided, it's best to stay on the sidelines until they all four come back into agreement. Doesn't mean that there won't be trading opportunities. It just means that the high probability, low risk is not as strong as when they're all moving together. Now this week so far in Logic 247, we have issued a total since Sunday night at 6 p.m. Eastern, total of 56 alerts, 7 never triggered, still waiting on the results of 4. We've had 45 actionable alerts, 7 were stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a 3-step method that I teach all of our traders. In the room, we risk 8 ticks on every trade because it's a faster time frame. You're looking for a goal of daily goal of a couple points in the S&P or the equivalent in the other markets. But if you choose to go from the mechanical model to the discretionary model, then you're moving from a 4-tick range chart to a 30-minute chart. Now everything under the hood is the same. Same indicators, same philosophy, same principle. The only difference is, number one, the time frame, Number 2, the amount of risk that's required for each trade. And you're typically looking for a larger move, so there's more profit potential. Okay? 2 points a day will allow you to earn whatever it is you want to earn if you can be patient and simply add the number of contracts that you trade over time. The blueprint, when you've put together your 10 consecutive days in a row, gives you the green light to go live with one contract, and you only trade one until you increase your account balance by $2,000. Once you do that, you add a second contract with the profit you earned trading one. You'll trade 2 for a while, and then the blueprint will notify you when it's time to add number 3, number 4, number 5. You never add more than one at a time if you're following the blueprint. You never add more than one at a time, and you only add with profit you earned in the market. Okay? So, as I said, there are 2 types of alerts. The ones I just showed you the recap of for the week. The Logic 247. Everything's based on logic. No mysteries, no secrets. Pure logic. Okay? Once you understand how markets work and how price moves and why, then it all becomes very logical. That's how you're able to learn to spot these windows of opportunity yourself. The companion to the logic alerts, in fact, the alerts that came first, the Concierge Trade Alerts, are these, and you can grab a screenshot if you would like, of last night's alerts. They came out at 7:45 p.m. The Wednesday or the Thursday session started last night at 6 p.m. Eastern. I'll typically get the CTAs out shortly after the Globex Open. Last couple nights got them out a little bit later than normal because I just wanted to see how the markets were going to flow. So you'll notice there's 2 numbers for each market. Now this is forward guidance for the entire session. As price starts to climb to 39.19, that's bullish. And so on the way to 39.19 or at 39.19, you want to be long. Above 39.19, you only want to be looking for long trades. If price starts to drop, that's bearish, then you want to be short on the way down based off of a logic alert or a window of opportunity that you spot on your own. And once you get to 38.95, you either want to be short and or only looking for short trades below 38.95. And so putting the 2 lines on your chart are really this simple. So the long side for the S&P was 39.19. And look what happened. Let's get this on 39.19. Okay, this is very typical. Price looks right up to that forward guidance. Now remember, at 39.19 and above, we want to be long and or only looking for long trades. On this 30-minute candle, it poked its head up above that area by 1.5 points, and price was quickly rejected. On the short side, the number's 38.95. Okay, and so price triggered, continued down to 38.90, so that's a 5-point move, $50 a point, $250 per contract traded. Now that was in the first 30-minute candle. When the next candle opened, it continued down to 38.85. So from 95 to 85, that's a 10-point move at $50 a point. That's $500 per contract traded. Price has now climbed back above the CTA number. Once an alert triggers, it gives you a tradable move. there is a greater probability of it triggering again and again and even again than not triggering again. We've had a sideways market for a couple days now, clearly illustrated here on the daily chart. We did have the higher high, the new all-time historic intraday high yesterday, but they draw a little small rectangle around all of this, okay? And we've still got an inside day going until we can trade below this number here, which we defined as 3880. That's where blue and climbing is. And so on the 30-minute chart, 3880 is just above our weekly trading zone at 3877/3878. So on another trigger, okay, we just got a brand new candle. If we trigger, then the high probability move is back down to 3890, 3885, and 3880 is the daily blue and climbing, and then just below that at 77/78 weekly trading zone. So put a little line right here. At 3880. Daily blue and climbing. Because that's a very important dynamic, but you can't see it on the 30-minute chart. The daily gives you that information. Now, as I said, we get accustomed to price turning right at the zone, which is what happened here. Price came down, and it was rejected at the zone and sent it all the way back up to the zone overhead. From 3,900 to 3878, that's 22 points down, 22 points back up. At $50 a point, that's over $1,000 per contract down and over $1,000 per contract back up. And I believe I hear Dr. Tom, so I'll pause here, and after we talk with Dr. Tom, we'll cover the Dow, the Russell, the NQ, crude, gold, and silver, just to see how they reacted around the CTA numbers. Dr. Tom, I believe you are with us.
I am.
Right. Hey, Gay, welcome to the show.
Thank you very much. You guys been having fun today?
Well, you know, for Thursday, we're always excited on Thursday because we know you're coming. So, yeah, we're having a pretty good day.
Well, thank you.
In answer to your question, Mike, when is an alert considered as never triggered? It depends upon price movement. If we have a short alert and price has traded considerably higher, Valerie makes that call. It's usually within a day or two. Sometimes it can be determined as never triggered on the same day. She might be able to clarify that more for you because she officially designates that. And Mike B, your question is, how about the 24% retracement on the daily? Okay, I showed you that earlier. You might have missed it. 24% Fib right now on the daily chart is down at 37.62. That is the shallowest possible Fib retracement. So, Dr. Tom, what would you like to talk about today?
Well, let's make a dealer's choice. Okay.
Okay.
I've got some good information on the dangers in the stock market.
Mm-hmm.
I've been doing a lot of research, and it's very, very overextended. Also, I have some thoughts on the impeachment, the kangaroo court that's going on.
Mm-hmm.
So,
why don't we talk a little bit about both?
okay,
That work?
all right. Works for me.
You want me to send you the
Why don't we
charts?
start? Not right now. I'll tell you in a minute, probably.
Okay.
Let me just start with the impeachment show trial that's going on. And if people want more detail, I'm just going to be brief on this. If you go to conservativetruth.com, you'll see there an article. Actually, it's in the archives because it was published last week.
Okay.
If you look in the archives.
Tell me again, Conservative Truth, is that it?
.org or .com, either one.
Okay.
And click archives, and you go down to the 6th article that's down there, and you'll see the title, A Kangaroo Court Worthy of Any Totalitarian Socialist Dictatorship.
Got it.
Okay. So the archives are off to your left, right under the home button.
Totalitarian governments don't have many problems in their legal systems. They can choose to shoot people they don't like on sight. This is quick, easy, and private. They can also choose to have show trials in which the outcome is predetermined. The accused can either plead guilty, in which case he may get a lighter sentence, or executed without being tortured first, or he can be found guilty, usually without having been given a chance to defend himself or to have an attorney. Tell us more.
Well, we haven't quite gotten to that place yet, but we're not far behind Cuba and Russia and China in this regard. Look at the snap impeachment. This was totally engineered by the very corrupt Nancy Pelosi, and it has a lot of parallels to the trials in communist countries. She called the House back, and after a few hours of so-called debate, basically her ranting and a few other Democrats, they rushed to vote to impeach the president. And they didn't even give him an opportunity to defend himself or have an attorney present. Now, she would have had him shot immediately following, but she figured out that the Secret Service would have problems with that.
Mm-hmm.
So they just impeached him on totally false grounds. Number one, as you've been hearing on TV, but better to look at the Constitution. On Conservative Truth, I've got all the founding documents there: the Declaration, the Constitution, the Bill of Rights, amendments, and the Federalist Papers. So if you want to ever research anything about the Constitution or the original intent of some of the clauses, Federalist Papers are great for that. But it says very clearly that the purpose of impeachment is to remove someone from office, a federal official from office. If you can remove Trump, the private citizen, from office, why can't the Republicans go back and impeach Obama when they're back in power?
Yeah, good point.
I mean, he did a lot of impeachable offenses. Or if they haven't already killed off Biden or put him out to pasture, then Comrade Kamala would be the president when the Republicans hit the White House back again. And she's out of office, so we can impeach her for inciting riots. I mean, we got video of her encouraging people to go out and riot. Mm-hmm. And then she raised millions of dollars to bail them out. And a lot of those same rioters, peaceful protesters, after she bailed them out, went right out and started fires in federal buildings, federal courthouses. And there was no calling out 25,000 National Guard in those instances. Matter of fact, the mayors in the state said, well, we don't want the National Guard. These are mostly peaceful protests. You remember that really great shot the guys standing with his camera and his microphone and talking about mostly peaceful.
Yeah, with the
and behind
fires,
him,
with the fires blazing
Yeah.
in the background.
yeah, I mean, that was a 3-alarm fire if I ever saw one. And nothing was done. And here he's being impeached on supposedly encouraging insurrection. Well, first of all, it all started long before he ever gave his speech. There were bombs found in both the Democratic National Headquarters and the Republican National Headquarters. The FBI had intelligence that there was going to be violence at the Capitol days in advance, but they didn't share that with the Capitol Police. There were warnings given to the Sergeant at Arms and the Capitol Police Department from other sources, and all of it was ignored. They had practically no security. As a matter of fact, there's video of some of the Capitol Police opening doors and allowing the protesters to come in, which is kind of crazy, but that happened. But all of that was, all the planning and all the inciting and everything was done long before President Trump gave his speech, in which he said specifically, and they never play it in the liberal media, march down Pennsylvania Avenue patriotically and peacefully and let your voices be heard. There's no incitement even to riot. And there was no insurrection. An insurrection is an attempt to topple a government. Okay. That was not what they.
We have
Yes,
two
Pat.
things here. We're trying to impeach a man from an office he no longer holds.
Right.
Right.
Which is
And-
unconstitutional.
And this speech that supposedly incited people to riot specifically said quite clearly, peacefully.
Yeah.
In this article, I'm sure you probably somewhere you quote, or maybe do you, where what he actually said? Is that
I
in
think
this-
I got the link to the actual speech. Let me go down and look here.
Let's see.
No,
So
it's
it
not.
is clear that the president did not incite a mob to riot. Watch the video, read this transcript. Pelosi and the members of the House knew this. The second impeachment is all for show. There was no mob, just peaceful supporters listening to a speech. There was no incitement. In fact, the president asked the assembled patriots to walk down to the Capitol peacefully and patriotically.
That's right.
Now that maybe that's some kind of QAnon code for act like idiots, but where I grew up, you know, I had a public school education. Peacefully and patriotically is not an incitement to riot. It just isn't.
It is not. And so the
So
article.
we're trying to
the
impeach a man from an office that he no longer holds for saying something that he did not say. Whoa.
Yeah. You have to remember that impeachment is never about justice or even about truth. It's pure, raw political power. People flexing their political muscle.
Mm-hmm.
Because in the first impeachment, Pelosi knew that there was no way that he would ever be convicted. And her words were very telling afterwards. The reporter asked her, well, he was found not guilty. And then she has this really ugly look at her. She says, yes, but he'll be impeached forever, you know, in that nasty voice. So that was her goal, to be able to say that President Trump has been impeached. And he was one of few presidents ever to be impeached. But an impeachment is like a grand jury indictment. It's an accusation, okay? And what they're supposed to do is have witnesses, present evidence, and as in any judicial process, the accused has a right to a lawyer and a right to defend himself and a right to face his accusers. None of that was done. Okay, so this was just pure politics, and they did it because they could, and because they hate the president, and so they just impeached him, knowing the first time and also this time that there's no way that they could ever get 2/3 of the Senate to vote to convict. No president has ever been convicted by impeachment, and it just sets a terrible precedent to put somebody through this for just political gain. Now, I'm sure if a president ever like walked out of the White House and shot somebody on the sidewalk, shot him dead, or did like Joe Biden has done, colluded with our enemy, the communist Chinese, and made millions and millions of dollars from them, that's an impeachable offense that would probably stick. But giving a speech, I mean, he's protected by free speech amendment of the Constitution, even if he did tell people to go out and smash things. But the main thing about this whole incident is mostly peaceful actually applies here. There were, by best estimates, around 250,000 people there, and only a few hundred got inside the Capitol, and most of them wouldn't have gotten in if the Capitol Police hadn't stood by and let them get in. It was a real weird thing, because we see video of the Capitol Police fighting with the protesters to keep them from coming in, and other video that again is genuine video, but they don't play it on the mainstream media, of them opening the doors and standing aside and letting them in. No one is addressing that. No one is addressing the Air Force veteran who was shot dead, who was unarmed, and was not threatening anybody. She was smashing a window. All right. None of the protesters were armed. Not a single one.
Interesting.
And yet they say 5 people died. Well, they want to make it sound as bad as possible, but that's a lie too. 2 people died. The one that was murdered by Secret Service, okay, and unless I see evidence to the otherwise, they're not talking about it at all. The only evidence we have is that she wasn't armed, and we got video of her smashing a window, and a hand comes into the frame and fires a pistol and shoots her dead. An unarmed U.S. Air Force veteran. Should she have been smashing a window? Of course not. But no one's lives were threatened. And the other 3 people who died, well, let's go back to the Capitol Police officer. He was in an altercation and was banged around. But he said he felt fine, and he went back to his office and everything, continued working that day, and then he died later on. So it could have been maybe he got a concussion that got worse, or could have been had internal injuries. We don't know. But only 2 people died in the Capitol that day. Why does the news keep saying 5? Well, because 3 people died of medical emergencies outside. Now, I was a paramedic for many years, and I've gone to lots of big events, Orange Bowls, things like that, where there are tens of thousands of people. And you expect to have at least a couple of heart attacks or strokes in any large crowd at any given time. That's just statistically expected. So there's nothing to tie the 3 people who died to the events inside the Capitol building, except the fact that they're outside the Capitol building. That's the only connection. So I would like to see a police report, an investigation. Every time an officer fires a weapon, there's supposed to be an investigation of whether it was a good shoot or not. They've suppressed all information about it. And they're trying to make it seem like 5 people died because of the violence of a few hundred people. Well, what they're doing is tarring 250,000 people with the brush that belongs to the 200 or 300 people that actually entered the Capitol. And I know one pastor who was there, and he almost entered the Capitol, but against his will. He was standing in front of the crowd, and as the crowd started rushing forward, they pushed him forward. It was either move forward or fall down and be trampled. So he managed to kind of push his way out to the side and get out of a rip current, and didn't enter the building. But there were other people who were actually just either pushed along like that, or maybe they thought, well, let's just go in. It's the people's house. We had the right to go in there, And they did. They didn't have a right to keep them out. But they had a right to stop people from doing violence. But there was never a threat against any congressman or senator. Not once. I mean, the Secret Service and the Capitol Police did the right thing. I mean, there's a lot of commotion outside. There's people smashing things. Let's get the vice president and these Congress people, to a safe place, just in case. But there was never a threat against anyone. No one ever verbally threatened or physically threatened anyone. And yet we have AOC talk about how she was paralyzed with fear, and she was crying and so on. She was 2 blocks away at her office. She wasn't in the Capitol building whatsoever. And yet she talks about how she was quaking with fear and how she was paralyzed and she thought she was going to die and all this. How are you going to die 2 blocks away? Right.
Now, I know there's some controversy over that, and I've even seen some of the fact checkers who kind of agree with her and kind of disagree with her. I think in a free world they would totally just disagree with her, but they kind of have to walk on eggshells with this whole thing because, let's face it, she's the Speaker of the House now. I mean,
I'm talking about AOC.
Yeah, I know.
Not
Nancy Pelosi in title is the Speaker of the House, but the real Speaker of the House is this first-term bartender or barista. Both honorable professions. I'm not knocking them at all, but she has gotten elected and kind of taken over, it seems. How did that happen? I don't have an answer.
Well, she knows how to manipulate the social media. She's attractive, charismatic, and she's young. She's developed a huge following. And Pelosi is scared of her, frankly. The whole Democratic leadership is scared of her because she's an out-and-out socialist.
Yeah, okay. She is. Oh, yeah. Now,
well,
there's a question here from the audience, Mike B. Dr. Tom, did you ever see Rudy Giuliani's podcast episode number 102? Clearly shows the hired professional rioter, John Sullivan, leading others into the building. At the 25-minute mark of the video, shows some kind of government agent giving his approval of what John is doing. If you've not seen this, please take the time to watch. Maybe you already have seen it.
I have not, and I'd love to. How would I find that?
Might be if you've got a link to his podcast, probably. I guess we can just... Rudy Giuliani. And then we'll throw in podcast. Okay. And it was episode number 102. So we'll just go right here. I'm not showing, what, do you remember, do you know, Mike B, what day episode number 102 was?
It's probably right after 101, Dwayne.
That's good. That's good.
America's Mayor. Maybe if you put in the search area the specific episode.
There's a thought. Let's do that. Episode number 102. Missing 102.
Well, I see 110 there. That's perfect, pretty close.
Yeah, right here. It says episode 102. Okay. Hold on. You go ahead. I'll be right back. So just keep going where you're going. When I come back, I'll find this. I'll be gone just a second.
Okay. All right. Great. So, the main thing that we all have to remember about this, I mean, this whole process, is that the trial is unconstitutional, and the Supreme Court has informally ruled that it's unconstitutional. Well, how is that? You know, I mean, has never even gone before them. Well, the Constitution says that the Chief Justice has to preside in any impeachment of the president. And it's not said, but it's implied that if he's not available for some reason, one of the associate justices can do the job. But he refused to participate in it because he knows it's an unconstitutional trial. So it's unconstitutional on the grounds that impeachment is for removal of the president from office, or really any federal official. And on the grounds that the Chief Justice, not a partisan, be the one who presides over the trial. Or actually Chuck Schumer chose the president pro tempore of the Senate, who is a rabid Democrat and known for his hatred of Trump. I mean, in no court of law anywhere would a judge be allowed to sit in judgment when they have a known, even just a little bias. Maybe the guilty person smacked his wife around one day or something like that. But to have someone in charge that is very public in his hatred for Trump, it's just crazy. But they know they're not going to win the trial, so they don't worry about constitutionality. But the Chief Justice does, and he refused to be involved. He said, I'm not going to preside over this. And none of the other justices, even the three really super liberal ones who also hate Trump, agreed to participate, because their job is to uphold the Constitution. The conservative ones and the liberal ones do it differently, but it's still the same Constitution. And so it would be unconstitutional for them to serve in a sham trial that they know is also unconstitutional. So besides the unconstitutionality, there's the ridiculous portion of the whole thing, which we've already talked about. The fact that the one count is a false count. There was no insurrection. All they wanted to do was let the legislators know that they didn't think that the electors should be certified. Well, in every election where the Democrats have lost, they've done exactly the same thing as the Republicans did in trying to decertify the electoral college votes. It never works, but in this case, there was so much fraud in the election, they wanted at least on record that they knew that there was fraud and that they stood against it. But the Democrats, like I say, have done this in every time when they've lost. So suddenly the Republicans who've done that are finding themselves for the same exact free speech and actually doing their duty as senators and congressmen. Anybody who spoke out against the certification of the electoral votes, they've been attacked viciously. They've been deplatformed. They've been taken off of all the social media. A book company that had already spent hundreds of thousands of dollars getting Josh Hawley's book ready to go, and I think it was already printed, they just stopped it right in mid-process for no reason. It's going to cost them lots and lots of money. But they're so hateful that just because he did what any other Democrat has done, they basically want to silence him. So we're in a situation right now where in this country, we're in serious danger of our country becoming a totalitarian government. Because with the Democrats in charge of the House and the Senate, and Biden, as I call him, because he's really Obama's third term, because he's taken directions from Obama. With them in control of all the levers of government, their next plan is to pack the Supreme Court with liberal justices. Right now, the balance is conservative, and it's been 9 justices for over 150 years. But just for political power, they want to use that power to add more justices to the Supreme Court, to where they've got an unbreakable majority. So that way, any unconstitutional law that gets passed will be rubber stamped by the Supreme Court. And then their last goal, of course, is to do away with the Electoral College, because then California and Texas, California and New York would decide every election. Politicians wouldn't even have to pay any attention to anybody else in the country. And so most of the money, most of the federal money that comes from other states would go to New York and California, the 2 worst states as far as abusing their fiscal authority and spending money foolishly, because they have messed up their economies. They're already asking for the rest of us, for the federal government, which means you and me that live in any state but Texas and California, to subsidize them, to send them money to fix up the mess they've made of their own economies. And we've already been doing that for years. We've been allowing states that have personal income tax and huge personal income taxes like Texas and California do. We've allowed them to deduct their personal state taxes as a deduction on their federal income tax, which makes no sense at all. It's unfair to the 6 states that don't have any personal income tax, and it's certainly unfair to the states, every state except those 2, that pay federal income taxes, and then their money is being partially used to subsidize these guys. But do we want to live in a country that is totally dominated by people like Mario Cuomo and Gruesome Newsom out in California? That's where we're heading. And that's why we're going to see the stock market crash. I'll just segue to that, because I'm very fearful, but I'm almost certain that we're going to see the stock market crash. Are you back with us there, Dwayne? Okay. Well, when he comes back, we'll flip the slides over, but at least I can look at them. Couple of quick things that I want to mention to you about the economy and the stock market. First of all, this is Jesus talking. I have said these things to you so that in me you may have peace. In the world you will have tribulation, but be of good cheer, for I have overcome the world. When I read that verse, it reminds me of the time when Jesus was sleeping in the lower part of the ship, and a big storm blew up, and the disciples came to him and said, Master, they woke him up and said, Master, don't you know that we're going to sink, that we're all going to die? And the Bible doesn't say this, but I could just imagine the Lord looking at him thinking, you know, you guys have been traveling with me for years. You see me do miracles. You know I'm the Son of God. Haven't you learned anything? Don't you have any faith at all? Don't you know that you have power as a child of God? You can speak to the storm and silence it. But he went up topside and he raised up his hand and said, peace, be still. Well, that's kind of like what's happening now. All of the turmoil in the country and all the fear and the anger doesn't have to affect us. I mean, am I happy about seeing a socialist and a junior socialist in the White House? Not at all. But have I let it disturb my peace? No, because Jesus is inside me, just like he was inside the ship. So he says, you're going to have tribulation. You're going to have trials. You're going to have troubles. That's 3 T's, alliteration. Tribulation, trials, and troubles. But then he says, be of good cheer. How can we be cheerful when we're going through tribulation? Well, because he's overcome the world. No matter what happens, we can have peace and we can know that God's got this. So before I talk about the stock market, just, you know, keep that in mind, that if you have Jesus live in your heart, you can be at peace no matter what happens. Now, is that Dwayne coming back to join us?
No, it's Valerie, but it just dawned on me.
You can do it. You did it. Valerie, I'm so proud of you.
Thank you.
That's right. As long as you're an organizer, you can do that. Okay.
All right, there we go. And
there you see it. All right. So if you remember when Obama was running for president, everybody said, Obama's going to fix it. You know, no matter what's wrong, Obama's going to fix it. Well, I remember the words of Ronald Reagan, where he says that government's not the solution, government's the problem. And another famous quote, the 9 scariest words in the English language are, I'm from the government and I'm here to help. So for those that believe that the government's going to take care of us, you know, basically be able to be the provider and the nanny and everything for everybody, here's 3 questions. First of all, can the government take care of us? Absolutely not. I mean, we've printed so much money that no one is buying our bonds anymore. And so the free printing of money is going to end. But even if they took every penny from everybody, not just take the rich people's money, but the middle class and the poor, everybody, and tax us 100%. If 100% of our income went to the government, they couldn't take care of everybody in the country. It's not possible because the government is so inefficient. I mean, just look at the post office. I sent a letter to California recently. It took 2 weeks to get there. They're just totally dysfunctional. If they can't run delivery of mail as well as FedEx and UPS can, they certainly can, if they had all the money, distribute it in a way that everybody be taken care of. So no, the government can't take care of us. Will the government take care of us? Well, even if it could, they've proven that they're not going to. Look at the 2008 financial panic. Obama bailed out a lot of investment banks, but they were all the ones that had contributed millions of dollars to his campaign. Other investment houses that were a lot more sound and had some of them been around for 150 years or more, he let them go under because they weren't in his court. So the government will take care of whoever's in charge of the government, just like in every communist country. The people at the top, if everybody else in the country is starving, they're eating caviar. If people are living in tent cities, they're living in mansions. That's the way it works. And finally, who is the government? I'm going to be doing a video soon on what actually happens in a crash, because a lot of people think it's total chaos, nothing working. Fireman's not going to come, your house is going to get burned down, or it's going to be like in the Chaz place in Portland, where the police weren't allowed to come in to take care of people when there's a crime committed and so on. But if things fall apart, here's my take on it. We'll still have government, but we're the government. It'll be a lot more like what the founding fathers intended than what we have right now. It'll be more like the old West, where the federal government had very little presence, and even the state couldn't do a whole lot. So every town elected and paid for their own sheriff or marshal, and they took care of the laws. They might have a few deputies or whatever, but it was at the local level. And I think the same thing's going to happen when the crash that I expect takes place. So here's our key dangers facing us right now. Marxist governance. I mean, they could put lipstick on the pig all they want to, but this is not just mild socialism where people sit around in posh clubs and drink cocktails and swap stories of how they think the government should be run. This is pure Marxism, and it never works. It's never succeeded. Major tax increases. Somebody voted for Biden, but I can't imagine anybody doing so. When he ran on a platform, and these are his exact words, if I'm elected, I'm not going to lower your taxes. I'm going to increase taxes. And his proposal was $4 trillion in new taxes. That's about 1/6 of the current national debt. But when a politician says 4, it really means 6 or 8. Okay. Because they'll put provisions in there that this agency or that agency shall promulgate rules to accomplish this. And to accomplish it, they're going to spend more money, and that will be built to the bill. So you're probably looking at 6 to 8 trillion in new taxes. And he's promised to overturn all the Trump tax cuts that help make our country the most profitable economy we've had in at least the last 100 years. So we're probably looking at 10 trillion or more in taxes. Who would vote for somebody like that? I don't know either. People who've been lobotomized or brainwashed. And of course, all the dead people and all the computers voted for him. Sorry if I sound cynical, but that's what happened. The stock market is going to crash. The two major indicators of an impending stock market crash are the fact that it's an all-time high. Well, That's positive, right? It's going up and up and up. It's going to go forever. Why would that be a indicator of a crash? Go back and look for hundreds of years and look at the charts. And when you see the crashes, you'll see very clearly that either an all-time high or a new high, say for the last decade, had been hit. Eventually people start getting smart and start realizing that this can't go on forever. I mean, the stock market's a roller coaster. You've never seen a roller coaster go straight up, have you? Doesn't work like that.
No,
So
it doesn't.
What goes up is eventually going to come down. But the other big indicator is investor confidence. When everybody starts saying, wow, the stock market's the place to be, then you should be heading for the exits. Warren Buffett once famously said that when your valet car park guy starts giving you stock tips, that's the time to get out of the market.
Yeah.
Often
it is.
We're going to see a crash of the U.S. dollar, and that will be triggered by a debt collapse. By the way, if anybody wants to see this whole thing, because I can only touch on a little bit of it, if you go to christianfinancialconcepts.com, you'll see I've started a 2-part series. This is out of part number 2, but it'll say financial survival in a socialist America. And parts 1 and 2 are posted there on the main page. So when you have a debt collapse, that's always the reason for a dollar crash. And when the paper money's not worth anything, then every time this has happened in modern nations, people go to gold and silver. Well, here's another danger. Gold. There are coin stores all around the country selling counterfeit Chinese gold coins. They don't even know it because they don't have the expertise to detect a counterfeit.
Do you mean the ones buying it or the ones selling it? Or both?
Well, both actually, because the one selling it, I bought it from somebody who said, look, I can get you a better price. And I know one guy, he's a Christian. He ran a coin store, but he didn't have much experience. And that very thing happened. A guy came and said, look, I can get you all the gold you want at such and such below spot. And so he looked at it, he felt it, to him it looked perfectly fine. He sold $1.5 million worth of counterfeit gold for one of his customers. He had one of the coins tested, and he found out it was counterfeit. And this is a good guy. It's not somebody trying to rip people off. So that's why I buy my bullion only from one dealer. It costs me more than I can get it from other places. But this is a guy with 50 years experience. He can smell a counterfeit across the room. And he's got a $20,000 machine, like an electron microscope, that can test it non-destructively. In the coin stores, the only way they can really test gold, they're both destructive. One is an acid test, and the other is by drilling into it. If you drill in and at first it comes up gold and then it starts coming up a gray metal, you got a counterfeit tungsten coin from China. So unfortunately, a lot of people are buying gold knowing.
How rampant is this problem?
Millions. They're producing millions of them. We've known for a long time that they were doing it, but 10 years ago, they're very crude and most anybody could spot it. But they've gotten more and more sophisticated. They've made billions of dollars doing this, so they can hire the best experts to make the coins look just like the real thing. And by using metals, they have the same specific gravity as gold. The water displacement test doesn't work either. So it's a big problem. Know who you're buying from. Okay. How can we protect our assets and our families? Well, here's what I'm telling everybody. Get control of your assets. I realize most of the people on this station here, this call, are pretty financially sophisticated. But I've talked to people that are very sophisticated, that are financial planners, stock person, and they don't have control of their assets. Just like there's a lot of lawyers that don't have a will. I mean, just because you know stuff doesn't mean you do stuff. So on a regular basis, I'll talk to people that have, we'll go down their assets. I say, well, I've got, I think 2 or 3 IRAs and a couple of Roth IRAs, right, honey? And then there's 2 401ks, the one where I used to work and where you used to work. And, we got the annuity. Well, how much do you have in them? I don't know. What kind of returns are you getting? I'd have to check. I mean, people, please. First of all, get control of them. If you've got more than one IRA, consolidate them because you're paying multiple custody charges. If it's a Roth IRA, you can't consolidate it with a traditional, but consolidate your Roths, consolidate your traditionals, and then find out what's happening, what kind of return you're getting. The average IRA and 401k in this country is getting a 4.5% return per year. And with the average inflation over the last 30 years being 5%, that means you're losing 0.5% a year. Or if you're making 5%, you're breaking even. I'm talking about in real terms, in purchasing power. It doesn't do you a bit of good to make 5% on a certain amount of money if that amount of money will still buy you the same stuff as a year before. If you have 401ks, please roll them over into an IRA. You can't do it if it's at your work and you're currently working there, but get into IRAs. I'm not a big fan of IRAs by any means, but if you're under 59 and a half and you take your money out of an IRA, you're facing a 10% penalty. I don't worry about the taxes, frankly. If people are thinking about taking money out of an IRA, I tell them, do you think the taxes will be lower 4 years from now than they are now? If you think that, number one, you're smoking something you shouldn't be smoking. And number two, then you should wait and take your money out then and pay lower taxes. But I don't know anybody, I've never met anybody who believes that taxes could be lower, even with a conservative president, with the whole country under the control of liberals who think that your money is their money. You're going to see taxes soar. So if you have an opportunity to take your money out of an IRA or a 401k and get your cash and pay the taxes at today's rates, you should do it. No question in my mind about it. I'm not giving you investment advice. I'm just giving you my opinion. I can't really give you investment advice because I don't know who you are or what your personal financial situation is. So I'm just telling you what smart people are doing. If you've left the employment and you have the ability to roll that IRA or 401k into an IRA, do it because then you can have some control. Now, I missed number 2 there. Get out of stocks. Where you have control, if you have a 401k of any kind, you at least have the ability, whether you're working at the place where the 401k is or not, you at least have the ability to go in, talk to HR or go online, however it's done, and move your money from stocks or mutual funds. Mutual funds are worse than stocks, into cash, which I'm not a big fan of because you lose 5% a year. But, what would you rather do? Lose 5% by going into the stock market and your cash is losing value, or put it in gold where as the money goes down, it goes up, or take a chance on losing 50 to 60% in the stock market, which is what most of the smartest people are predicting right now, because the stock market is so overvalued. I can't even get into it because we don't have the time, but
Natalka made a comment, over the 500 wills I reviewed with my clients, not one of them was done correctly. There were a few that were not bad, but most of them were terrible. So much for the professionals who are supposedly doing their jobs.
whoa, 500 wills. And almost all of them bad. Yeah. But,
She also said,
you know,
I like this, she says, to know nothing is bad, to learn nothing is worse, to do nothing is the worst.
I like them. Let me write that down. To know nothing
Is bad, to learn
Right.
nothing is worse, to do nothing is the worst.
Yeah, because that implies that you did learn something, but you didn't act on it. So that is the worst. You know, the Bible says, to him that knoweth to do good and do it not, that is sin. Okay, so if you know that you're supposed to help your brother out, you know, give to the poor, support the ministry and so on, you know that's good, and you don't do it, then that's sin. Okay. Now, it's easy to do if you're in stocks. You just call up whoever's managing your IRA or your 401k and tell them you want to get out of stocks and into cash. And then they'll start to tell you why you should stay in, because stock markets keep on going up. And you say, look, I'm willing to risk losing 5% if the market continues going up, much more than I'm willing to lose 50 or 60%. I mean, that's just common sense, which unfortunately is not all that common these days. But, you know, when the market's up this high, when the prices of stocks in most cases have no relation to the real value of the company, because they either have no earnings or not nearly enough to cover the price, then that's the time to get out. So don't even listen to them. You know, pray about it first, obviously, but if you feel like you're supposed to get out of stocks, do it, and don't engage with them. Because I talk to people every day. They argue with them. One lady made the mistake of telling her broker that she's selling her stocks because she wants to buy gold. Well, he went off on a big rant about how gold doesn't make money and how it doesn't pay interest and how volatile and how dangerous it is. And she's like 70 years old, a very no-nonsense lady. She says, young man, I'm 3 times your age, and I don't need advice from you. I just need you to follow my instructions. But I will say this. I've studied this. I prayed about this, and I've made my decision. And nothing you say is going to change my mind. But by the way, gold being so dangerous, it's the only asset class in the world that has retained its value for 3,000 years. An ounce of gold has bought the same amount of food for 3,000 years, and it's never gone down to zero. And she said to him, how many of your stocks gone to zero? Well, I kind of laughed when she told me about this, and as part of the preparation for this, I looked up, maybe I can find it here real quick before we run out of time.
The irrational exuberance is really exemplified today in a stock that just went public. Bumble, it's an app. Their business, it's a dating app. Shares of Bumble, which operate under the dating app under the same name, began trading today. The company's stock began trading up nearly 77% at $76 per share. Now, when they put the IPO together, they priced their shares at $43 a piece. And in their first day of trading, they've hit $76. It's a 77% gain. Bumble competes against Match Group, which owns rival apps Hinge, Tinder, and OkCupid. On Bumble, founded in 2014 by current CEO Whitney Wolf Herd, women have to initiate the first conversation for heterosexual matches. I guess that's not true for the other kind. Shares of Bumble, which operates under the dating app under the same name, soared in its initial public offering today. Company stock began trading up nearly 77% at $76 per share under the ticker symbol BMBL. It priced shares at 43 apiece above its target range of 37 to 39, and it sold 50 million shares at that price. And all of those Wall Street insiders, all those investment banks that got in at the IPO price, well, they made a handy chunk of change today. Following its debut, Bumble's market cap, now this is a dating app, okay? You can call it, you can flower it up any way you want. It's a dating app, of which there are already plenty. Following its debut, Bumble's market cap, as of right now, $8.3 billion, B as in boy, dollars.
And it's all air.
Yeah.
I mean,
at 31,
what's behind it?
Wolf Herd is the youngest female founder to take a U.S. company public. She also joins the ranks of an extremely small list of women founders who led IPOs, including Stitch Fix's Katrina Lake, who took her company public in 2017, and Julia Wainwright, who took the Real public in 2019. Bumble has a freemium model, which means users can join and match for free. It earns the bulk of its revenue from in-app purchases and different subscription offerings like Bumble Boost, which starts at $12.99 a week, and its upgraded Bumble Premium, which starts at $17.99 a week. The paid offerings let users do things like match their profile more prominently, see who's liked their profile first, or set themselves to travel mode. It's a similar model to rival apps Hinge and Tinder, where users join and use the core functions for free but can pay for further use. The company said it had 12.3 million monthly active users as of September 30th. Speaking to CNBC before the company's first trade, Wolf Herd said the company's focusing its efforts on converting more of its user base to those paid users by reinvesting in future monetization features and product offering. So in their S1 filing, it generated $376 million of revenue in the first 9 months of 2020, with a net loss of $84.1 million. In the same time period in 2019, they brought in revenue of $362 million and reported a net profit of $68 million. And it is valued based on today's IPO at $8.3 billion.
Losing money, and it's valued at billions. So
if that doesn't back up everything you said about stocks, irrational exuberance. Many of us remember that term, which turned out to be 10 years ahead of its time. That was said by, if I'm not mistaken,
Alan Greenspan.
Alan Greenspan. I was going to call him Greenberg, but yeah, Alan Greenspan in the early 90s.
Yeah. Well, this is obviously tongue-in-cheek here. Why you should entrust your retirement to the stock market. Most people I talk to have everything in the stock market and don't even know it. Like, for instance, they say, well, I've got an annuity that's an insurance product. Yeah, but they own stocks. In fact, they own the worst stocks in the worst way, which is mutual funds. So obviously, I don't really think that you should trust your retirement to the stock market. But all the major indicators are pointing to a crash. The experts are predicting a crash. As I've said several times, stocks are greatly overvalued. The huge stimulus, I'm not talking about the little dribbles of checks that they're sending out. I'm talking about where they're giving money to irresponsible governments and pork and so on. But there's two things that really are important here. Number one, they did a survey of people that got stimulus checks, and this is not the majority, it's not a percentage kind of thing, but it's just the one item out of many that people spent the stimulus checks on. The most frequent item was buying stocks. Now, how dumb is that? I mean, you got to know that, you got to assume that most of these people have debt. They have mortgages, they have credit card debt, whatever. Why not pay down your debt? I mean, what good can you do with $1,200 in the stock market? It's just, and it was all ages. It wasn't just millennials who'd never seen a crash before and didn't know how to do it. By the way, if you have somebody managing your money for you, if they haven't been through at least one stock market crash, don't let them handle your money, because it's just like me when I was a firefighter. I would just run into burning buildings, and I had my bunker gear on to protect me, and no problem. You know, I was trained and so on. And I didn't really respect fire until the first time I got burned. And after that, I was very respectful. Not fearful, but respectful. But that's the same with the stock market. The other thing is the money supply, the free-floating money supply, has doubled over the last 6 months. And that's not all the dollars ever printed. We're talking about the money that's in, I think it's M5. The free-floating money that's sloshing around. Whenever the government increases the money supply, stock market goes up, because that's the only way most people know how to invest. I'm not talking about you guys because you know how to trade. That's a different thing. That's a profession. But I'm talking about amateurs that are just buying stocks because, like, their kids like Disney and so they want to buy Disney. But let me just show you a couple. Oh, this is the Warren Buffett indicator, which is, it predicted the dot-com bubble. It predicted the 2008 crash. And right now it's sitting at 184%. That's close to the highest level in the last 20 years. And I think Warren Buffett's probably a pretty good guy to emulate if you can. He's no dummy. Let me just show you. I like that one. Remember, if you can't hold it, you don't own it. Stocks, mutual funds, annuities, they're all paper. They're all going to go up in smoke when the dollar crashes. You might want to check out this article, Conservative Truth, how to jailbreak your money. Go to the same place we went before, go to archives and go down to where it talks about how to get your IRA and 401k money out of prison without penalties. There's a law that the government passed that expired at the end of last year, but they've extended it to the end of March. It's how you, even if you're under 59 and a half, you can get money out of IRAs and 401ks without penalties, okay? And they give you 3 years to pay the taxes on them. So I don't have time to go into it, but oh, here's what I wanted to show you. This is the bankruptcies, almost 6,000 of them, just in the last decade, okay? And yet the stock brokers want to tell us how safe the stock market is. Insurance companies, well, you know, I've got this thing where I put money in and I'm guaranteed this amount of money for life and so on. Well, not so much. What good is a guarantee if the insurance company goes bankrupt? You know, when somebody says guaranteed to you,
right,
your first question should be guaranteed by what?
Mm-hmm.
AIG, the biggest insurance company in the world, went bankrupt. I'll end with this: pension plans. One of our clients, you know, there have been many state, county, not so far federal, but definitely state, county, and city pension plans that have gone bankrupt, and many, many more private companies. And so this lady knew that their company was in trouble. He worked for her, and she was nearing retirement age. She says, well, what do I do if the company goes bankrupt? And he said, plant a garden, prepare to defend it. Okay. Not very encouraging words. So my message is hard assets, get out of paper. You know, the Bible says that there's a time and a season for everything. I spent years buying and selling stocks, and I made 50% or more, sometimes as much as 100% a year for my clients, trading stocks. I was a professional trader trading millions of dollars worth of the firm's money. I was good at it. I couldn't do that today. The market dynamic has changed so much that I'm playing against supercomputers that can get into a stock and back out of it and make $1 million in the time it takes me to reach over and pick up my mouse. So,
yeah, these high frequency algorithms, you know, they're in and out for a penny. I mean,
yeah, because for a penny, if you buy millions of shares, that adds up to money, right?
Yeah, they say on the New York Stock Exchange, 70% of all trades placed are done by a computer, by an algorithm, and of course the algorithm was written by, you know, a man or a woman or a group of people, and all it does is it establishes a certain set of parameters that says when these conditions exist, when these conditions exist, sell. And so all the thinking is done beforehand, and so that's why when you see a move that, if you're just looking at the chart, when a certain price gets touched, maybe you're trading a 30-minute chart or a 5-minute chart, a certain price gets touched, and then all of a sudden it goes to the moon or falls out of bed, you're scratching your head. Why? Well, it's just because so many computers have been sitting out there with a little line of code that's just been sleeping until a certain set of conditions are met, and then that line of code wakes up, goes to work, and does what it was programmed to do. And
that's when Pygmalion jumps in. Pygmalion was the name of the play before My Fair Lady, and the Pygmalion effect is that when people see people doing one thing, they pile on. They see people selling, they panic sell. If they see somebody big buying, then they try to jump on the bandwagon. So it becomes a self-fulfilling prophecy. But I got to run, but let me close with this, Dwayne. You mentioned about the, you know, computer trading and you know, it's out of the control of human hands. Black Monday, October 19th, 1987, I was a very young stockbroker, and that was the day the market lost 22.6% in one day, right? And it was all caused by algorithms being triggered. It was eventually traced back that somebody in the government put out a false number. I don't know if it was on jobs or economic numbers, whatever, but it turned out to be false. But it spooked enough people to where enough stocks were sold that the computers just took over. And it was just, again, it was like a snowball going down the hill. It just keep picking up more snow.
Right. Gaining momentum,
so
right.
It's really hard for people to compete in stocks. You guys do. I admire. I couldn't do it. But I've tried to hire Dwayne to trade money for me. But anyway,
you can learn. You can learn.
Well, I don't know if I'm smart enough, Dwayne.
No, you are. Trust me.
I failed third grade. Anyway,
Wow, the street sweeper
Listen,
came back for a second day. I guess he must have missed a spot.
well, listen, great
Hey,
to
it's
be
been
with
a
you.
pleasure. Enjoy having you on the show every week, and we look forward to next Thursday.
Okay. Goodbye, and God bless everyone.
Thank you so much, Dr. Tom. Really appreciate you. God bless.
Yes, sir. Bye-bye.
Okie doke. Here's where we left off on the S&P. Okay, we talked about a second trigger, right? And now we have a third trigger. Okay, and so support, initial support 38.92. If we get through that level, okay, then our next level of support's down at 38.85. Then we have the daily blue and climbing that we looked at on the daily chart, and then we have this week's weekly trading zone at 38.77/78. So again, as you can see, it's not magic, it's not voodoo, it's no secret. It's just logic. Price trades from support to resistance, back to support, back to resistance, back. It's a never-ending cycle. It's been there since the inception of the markets, and it will always be there. What our strategy and what our indicators help you see is where the next logical spot for support and resistance is. The weekly trading zones, once they're issued Monday morning at 6:15 a.m. Eastern, that becomes fixed support and resistance for the entire week. Okay? The indicators are dynamic support and resistance as price flows. Now, here, where we had the bearish cross, all of our traders know that on the way back up, the area where that bearish cross took place, right there, as price comes back up to that area, it's most likely going to be good resistance. If and when price returns to the BBC, because we're below the BBC, we expect that to be resistance, which will give us a leg to the downside. This retracement here, we bounced from support at a previous weekly zone up to this week's zone and red and falling. So we expect that to be good resistance. Anytime we pull up to a zone, we expect resistance, just like here, just like here. And anytime we pull up to red and falling, we expect that to be good resistance. And if price can get through red and falling, then we expect the BBC to be good resistance. What would have to happen in this market right here today for us to become bullish on the S&P and start looking to go long is we would have to overcome red and falling, this zone, the BBC, this bearish cross, because even if we spike up through the BBC, that area right there, we expect that to be good resistance until proven otherwise. And then that would take us up to these swing highs, which were the high that we expected because of this. And if we can take out that swing high right there at 30.90.20 and a half, that will create a window of opportunity right up here. Purely logical. Price dropped through the zone at, I'm going to pull those up again, 38.95. Okay, that was this number right here. Price just dropped. It's 38.92, so it's 3 points. Now it's back above the trigger. Okay, so we had a trigger, a trigger, a trigger. Price, if buyers are committed, if they're more committed than sellers, when there's more buyers than sellers in the market at any given time, price will move up. there's more sellers than buyers, price will move down. It's that simple. Now, you can let it get as complicated as you want with all the different indicators and oscillators and the advanced decline, the stochastics, the MACD, all of that, and I'm not saying that any of those things, I'm not saying anything bad about any of those things. I'm sure they all do exactly what they were created to do. We just don't use them because we found that we don't need them, right? The more things you put on your chart, the more complicated it gets. And that's exactly what the vendors want, is they want it to get really, really complicated so that they can sell you an endless parade of solutions to problems that really don't exist. It's not easy, but it's this simple. On the Dow today, let's see, the market opened last night at 1800 hours, as it does, right there. So we had a Concierge Trade Alert. Now that's the static report, good for the entire session. It's forward guidance for the entire session. Said to consider being long at 31,530. We never got there. It also said consider being short at 31,280. And so you would draw those two lines in the sand, as I showed you earlier. And so we triggered 31,280 right there. And we dropped to the weekly zone below that we expect to be good support until proven otherwise. And it was, okay? So from 31,280 to 220, that's a 60-point drop, $5 a point, $300 per contract traded. The support, sent price looking for resistance, put it back above the trigger, triggered a second time, right back down to the zone where we found support, which is what we expect. When price is headed up to a zone, we expect resistance, which we found, support. Now we spiked that zone, but look where we closed, above it. Resistance, support. And on this move up, resistance at red and falling sent us back down again to support at the weekly zone. And you don't have to make it any more complicated. I beseech you, my brethren, don't make it any more complicated than that. Please. Zone to zone. From 47/48 to 95.96. So from 45 to 95, that'd be 50 points. So it's a little less than 50 points. Yeah, call it 40. At $50 a point, that's a $2,000 per contract drop. So where's the next window of opportunity? What's the high probability thing? Well, if price can get below that support right there, there it is. Don't make it more complicated than that. All the indicators and oscillators in the world, I don't care how much you pay for them, okay? I don't care how many videos you watch, how many courses you take, doesn't change this fact. If price takes out that level of support, the highest probability thing is that it will continue until it gets to the next easily identified level of support. It's all right here. Everything you need, all the knowledge and all the tools are right here. Can I teach you how to trade? Yes. Can I promise you that you'll become a highly profitable professional trader? No. I can teach you how to play baseball, but I can't promise you you'll ever pitch for the Yankees. The parallel there, it's pretty good. Think about it, okay? Once you understand the simplicity of the underlying principle of the market, and you have the knowledge and the tools. Now it comes down to you. Do you have the self-discipline and the patience to wait for the market to hand you a high probability, low risk opportunity? See, even though we know that the next high probability move is back to the zone, it does not become a high probability, low risk opportunity until we trade below this level of support. Buyers clearly stepped in here and drove it up to here. Okay? And so coming down, we have to expect that this is going to be good support until proven otherwise. But because we're below the BBC and because we're below red and falling, then the higher probability is that this won't hold as good support and that this will. Numbers for the Russell last night were 2320 on the long side, which we never saw. And the Concierge number on the short side was 2270. And that triggered right here. Important prices, important areas, almost always tested. No surprise that once triggered, price from 2270 dropped down to the zone, 2248. Call it 2250, 20 points, $50 a point, $1,000 per contract traded. And because important prices, important areas are almost always tested, no surprise, the price got back above the trigger. Did it again. Is doing it again. Is in the process of doing it again. From the number 2270 on this move down, we've already reached 2263. 7 points, $50 a point. $350 per contract traded. Next on the list is the NQ. The alerts are part of the curriculum. Remember, our goal is not to just give you some alerts that you can trade and try to make some money. From what you learn in the room to the alerts, that's how we teach you to find these high probability, low risk opportunities yourself. Not based on some wacky theory, but on just pure logic. What's pure logic? Pure logic is if I stand on the roof of my house and I drop a rock, it's going to hit the ground. If I take a beach ball and I hold it underwater in the swimming pool and let go of that ball, it's going to pop up out of the water. Both of those things are logical. Just makes sense. Because you understand gravity, buoyancy. So there's some things you have to learn, some underlying principles. Then you can apply logic and you can do this yourself. On the NQ, the numbers were to be long above 13,800, which we never saw. And on the short side, 13,602. Which the alerts came out right here, 1800, and 13,602 has not been touched yet. Okay, so the NQ, now when you draw those lines in the sand, everything between those two lines is the market making up its mind what it wants to do. Okay, next on the list, crude oil. Okay, the number for crude on the long side was 58.95. Which we haven't touched. And the short side, 57.75. We haven't touched that either. We also haven't had an alert. Since the Globex opened last night, I think there's only been 3 or 4 logic alerts. Why? Because of this. Because there was no high probability, low risk opportunities. When there is, that's when an alert comes out. When there's no alert, then that means there's nothing that meets our qualification, how we determine high probability, low risk. Now, this bullish cross right here, support, 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 drag it on across. This bullish cross created this support, this support, this support, this support. And if we come down again, we got to expect that to be support until proven otherwise. Okay. So if we take out this support, we have a weekly zone at 57.85 to 57.90. So we will have a nice window of opportunity. From 58 to 57.90, because the zone is 85/90. So you've got, you know, a 10 tick window of opportunity, which is $100 per contract traded. If you've earned the right to trade 2 contracts, then it's $200. If you've earned the right to trade 3 contracts, it's $300. Please don't go live until you qualify. Never add more than 1 contract at a time, only when the blueprint says it is time, and never add an additional contract with anything other than profit you earn in the market. Following those simple rules right there will save you a lot of pain, agony, and aggravation. And if you find that you're not able to follow those very simple rules, trading might not be for you. See? Because again, we give you the knowledge and the tools, but you have to bring to the table things we can't give you. I can't give you patience. I can't give you self-discipline. As much as I might want to, I can't. You got to reach down inside of yourself and find those things. I wish trading were for everybody, but it obviously isn't. If it were easy, everybody would do it. Not easy, but it can be simple. All right, one last market to look at, and that would be gold. CTA last night for gold was to be long above 18.49, and the swing high was 48.6. Again, this one never triggered. Again, not unusual. Price walks right up to the important price, important area, 18.49. It doesn't like what it sees, so it heads in the other direction. Short side on the CTA last night was 18.40, which the market did find. Important prices, important areas, almost always tested. So from 1840 we dropped to 34.4, so call it 35. Rounded up, it's $500 per contract traded. And then we get back above, and then we trigger here. And again, the trigger for gold, 1840. We have a zone below at 33/34. So that's $600 per contract traded. We had a slice, okay? Price sliced through the zone like it wasn't even there. And this time it did not do what the slice normally does. Normally, when the slice runs out of steam, it will retrace to the zone that is sliced through and then continue in the direction of the slice. That didn't happen this time. 20% of the time, the market does not do the next high probability thing. Why? Because order flow changes. What is order flow? All the buyers and sellers in the marketplace at any given time. So far this week, 56 alerts, logic, 7 never triggered, still waiting on 4, 45 actionable, 7 stopped out based on not risking more than $300 per contract per trade, less when possible. 16%, not a typical number. 20% is the average over the last 132 weeks. Again, the alerts are not created for you to just trade the alerts I know some people do that, and you know, if that's all you want to do, then it's your passport. You can do what you want. It's your trading business. You can do what you want. But the true value is not just in the alert. The true value in having a CFRN passport is that we teach you from the room and then around the clock how to find these windows of opportunity yourself. They're there. We just help you see them. And with that, it's time now for our good word for the day. Yesterday, we talked about Romans 8:15. We talked about the fact that you are accepted, loved, and secure. Today, let's talk about the Bible and your health. A peaceful heart leads to a healthy body. Proverbs 14:30. I think we all know that stress is what they call the silent killer. And our body has this incredible thing called the fight or flight syndrome. You know, when in danger, this goes back to the early days, you know, when there's danger present, your body will either get the heck out of there or stand and fight, flight or fight. Now, when confronted with that danger, all sorts of things happen in your body. Adrenaline flows, you know, cortisol levels elevate. Now, too many traders find themselves in fight or flight status every time they get in front of the chart, every time they put on a trade. Their pulse quickens. You know, their fist tightens. Their heart goes thumpity bump a little faster than it should. That tells you that you're not in control of your emotions. That tells you that you're not emotionally detached from the outcome of the trade. In Trading in the Zone, Mark Douglas does his very best to teach you how to become focused on the process, not the outcome. Because whatever trade you're in right now, it's just another trade. It will either be profitable or it will not be profitable. And if it gets stopped out, as long as you have a hard stop in place, which you should on every trade you ever take, then it doesn't kill you, doesn't blow up your business. It might be a little humbling, but you'll get beyond that too as you learn to focus on the process versus the outcome. And over time, you'll find that when you're focused on the process versus the outcome kind of takes care of itself. Suddenly you start having better outcomes because you're focused on the process. Now, back to our body. In the last half century, doctors have come to understand and emphasize the correlation between mental and physical health. Yet the Bible talked about it over 3,000 years ago when King Solomon gave us these 4 proverbs. Number 1, a peaceful heart leads to a healthy body. Jealousy is like cancer in the bones. Number 2, Proverbs 15:30. A cheerful look brings joy to the heart. Good news makes for good health. Sometimes we maybe shouldn't spend so much time glued to the news because there doesn't seem to be a whole lot of good news of late. Number 3, for Proverbs 16:24. Kind words are like honey, sweet to the soul and healthy for the body. When you speak to someone, if you speak kind words, you actually have an effect on their physical well-being. I'm not saying you should blow smoke up everybody's chimney, but you can be kind. Number 4, Proverbs 17:22. A cheerful heart is good medicine, but a broken spirit saps a person's strength. Now, These scriptures could be summed up like this: a faith-filled attitude, focusing on what's good instead of what's bad; laughter, the ability to rejoice; and spoken words of encouragement have a profound effect on your health and the health of those around you. So what's the antidote for stress? Serenity. What's the remedy for fear? Faith. And where do serenity and faith come from? God. David was in some pretty bad shape in Psalm 30 verses 8 and 9 when he wrote, "I beg the Lord for mercy, saying, what will you gain if I die, if I sink into the grave?" We don't know whether he was stressed out mentally or if he was physically ill. But God intervened, and later in the same psalm, David wrote, "You have turned my mourning into dancing. You have clothed me with joy, that I might sing praises to you and not be silent." Psalm 30:11. There's no doubt about it. Your thinking has a profound effect on your health. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.